Hey guys, good afternoon, everybody. Today's Tuesday, February 14th. It is 5:05 p.m. right now. Our scheduled mentoring sessions are 5 p.m. So I'm a few minutes late, guys. I'm just going to go ahead and set up this room real quick, and then we will get started shortly with this mentoring session for today. So just give me a few moments to finish setting this up real quick, and then we should be good to go. A couple more things here to update. All right. Looks good. Looks good. Let me get this link sent out to you guys here in the premium. And we should be good to go. All right, so I'll get a few moments for people to make their way in, and then we will get started shortly. All right, post this up. The other channel's over here. All right, so good afternoon, guys. It is Tuesday, February 14th. It's 5:06 right now. Our scheduled mentoring sessions for 5 p.m. So a few minutes late, guys. Sorry for the late start. I was trying to get the YouTube going, but they tend to have technical issues like every so often. So I think YouTube is just having issues with like getting everything started up. I think everything is good and up and running now. So we should be good to go. So if you guys have any questions, feel free to put your questions in the chat. Otherwise, I don't really have much on the agenda today because we covered a lot of the stuff yesterday during our normal session. But you know, this session is typically meant for people who couldn't attend the first one. However, if you guys have any questions or you want me to review any of the trades from today, I think that's probably the main thing we'll be looking at is mainly going to be the trades from today. That's probably going to be our main agenda. Otherwise, you know, if there's anything else you guys want to cover, any strategies you guys are confused with, any concepts you guys need help with, you know, just go ahead and drop your questions in the chat. So let me just post this up on the social media as well so that people can join in. And I think we should be good to go. All right. All right, cool. So it looks like majority of people are here so far. Let me just check the other chat over here, see if there's anything else that I'm missing. I don't think so. All right, cool. So we have one question over here. So first question is from Allison. Allison is asking, I just had a question about earlier today. There was an invalid signal and I wasn't sure about the explanation afterwards about the pivots. With the momentum strategy, does it have to cross back over level 1 pivots or level 1 and 2? So here's the thing with that strategy. Let me just put the requirements up here, Allison, because the pivots aren't really a requirement for that strategy. When you guys are following these strategies, just make sure to look at the requirements. If there's nothing here, if there's nothing here that says, okay, look at the pivots, I don't think there's any strategy here that actually, aside from the variation scalp, the only strategy that requires the pivots, you know, anything using the pivots would be the momentum scalp variation. This is the only strategy that requires you to look at the pivots for requirement 4 and 5. For momentum scalp here, there's no requirements for the pivots, so there's nothing that's necessary. Okay, yeah, so let's go over that question there. I just want to make sure that you're like aware of the different strategies, right? Because a lot of people have questions that don't apply to specific strategies, but whenever you guys are applying these strategies, just make sure that you're looking and just checking off every requirement every time so that you guys can understand the difference between them. The main difference with the momentum scalp variation is that it uses the pivots. The main thing with the momentum scalp failure is that you're looking for a momentum signal in the opposite direction of the trend. And then for the regular momentum scalp, you're just looking for momentum in the direction of the trend. So that's why these kind of here, they move in order because they're all kind of different, but they do overlap to some extent. So, going back to your question here, Allison, we'll go over the momentum scalp variation. And the requirement that you're asking about is 4 and 5, right? So you're basically looking for price to close past pivots in retracement and then confirm price close past pivots in correction. So there's no specific pivot that it needs to cross. It just needs to cross any pivot. So let me show you one example here. We're just going to skip like the first steps, and I'm just going to show you like examples that came up over here that are, basically clear to see because they're easier to identify by looking at this here. So let me just go back to this. Let me see. I think volatility died down a bit here, but we can still use it as an example. So using this right here, first you want to confirm the overall trend. We're just going to assume that the overall trend here was bearish. I can't tell because this was like late session. This is actually after the session. This is like the new day, like today, basically. So with this right here, first you want to confirm the overall trend. We're just going to assume everything here is bearish, even though we can't really assume that because this is so late in the session. We're just going to assume that everything here is bearish because we want to make sure that we confirm this last part, right? This is where the confusion is. So we're assuming that the overall bias is bearish. You want to confirm momentum aligns on the 5 and 10. So we're just going to assume that everything here has a sell signal for the 5 and 10. Moving down to the third step, you want to confirm retracement momentum signal. We have that retracement signal right here. Since we're looking at a downwards trend, we have a buy signal right here. So we have that retracement momentum signal at this point. For the requirements that you're referring to, 4 and 5. So first, you want to confirm price close past the pivot. So basically, you're like curious whether, it has to cross a specific pivot, but there's no specific pivot that it needs to cross. It just needs to be down below and it just needs to swing above it. So like, for example, here, let me just turn off a couple indicators here to clean things up. Volume is not necessary. We'll just turn off the trend meter. I just want to take off as many things as possible so that you can see what I'm explaining. So basically right here, you can see price is in a downwards trend. And you can see from this candle right here, price is below the pivots, right? For step 4 over here, you want to confirm price close past the pivots in retracement. So retracement means going against the trend, and you're just looking for any candle to close above the pivot. So realistically, you can see that it's this candle right here. Once this candle closes above it, that already fulfills a requirement number 4. You want to confirm price close past pivots in retracement. So technically price is supposed to be below the pivots, but when price swings above here, that's going to confirm retracement. So moving on to step 5 over here, you want to confirm price close past the pivots in correction, right? So this right here is step 4, where price is, let me just move this down a little bit. All right, so this is step 4 over here, where price is closing in retracement, right? Once you have this closed in retracement, the next step over here for step 5, you just want to make sure that price closes right back below the pivots, right? So not necessarily any pivot, but it needs to close below all of the pivots. So closing above could be above any pivot, just as long as it's not below the pivots anymore. So that's going to be the retracement right here, this area. And now you're just looking for a red candle to close below. And I say red candle because obviously in order for price to close below, it needs to be red, right? Because if it's green, it's just going to keep pushing up. So for this red candle right here, this does not close below the pivots. So that doesn't fulfill the criteria. This red one right here actually does fill the criteria. I know there's a little gap right here. Typically during the live session or in general, you're not going to see a gap like this. The reason why there was a gap here is because there's the market switching. You can see the time switch here from 1357 over to 1500 because the market is closing around this time period. So basically, this is what you're looking for. You're just looking for price to be above the pivots. And then step 5, you want to confirm price close past the pivots in correction. Since we're looking for a downwards trend, you're just looking for this to close anywhere below the pivots. So for example, right here, this is the criteria. You're not necessarily looking for a momentum signal, but this here aligns with a momentum scalp. So you have both a momentum scalp entry right here, and then you also have a momentum scalp variation. So you have this here lined up, retracement, confirmation of correction right here. And then this would technically be your entry if you're entering a trade here. Obviously, it's not a trade I would take because this is like so late into the session. It's going into a new day, but you can see here that it still works and it still hits profit target. So do you need another example, Allison? I can show you another one if this is kind of confusing, but if you're okay with it, we can move on. So I'm here to help you guys out. Whatever questions you guys need help with, there's no dumb questions, right? If you guys need to ask me how to set up any of these tools, just let me know. Because I know some of you guys don't even know how to use these short and long position tools. I can show you guys just whatever questions you guys have. Whatever questions you guys have, I can answer. So let me just scroll up real quick. We have one question from Pam. So Pam's asking, do the scalp strategies always go in order? So meaning if the first one hits, the others are more likely to follow. So you basically take 3 entries. They don't always go in order, but for the most part, they do. So let me see if I can find an example here. I'm going to try to find an example where it doesn't go in order, but for the most part, they typically do go in order. I'm just going to turn off these gold bars so I can just find the momentum signals. So let me see if I can find one here. Let's see. So these here go in order because this is a momentum scalp failure. This is a momentum scalp variation. And this right here would be momentum scalp failure, momentum scalp variation, momentum scalp. So they typically go in order. The times where you'll see it where it's not really going to go in order is when price is going sideways like this. When price is going sideways like this, you shouldn't be taking any trades. So let me see if I can find one here. I mean, they still technically go in order. So for the most part, they do go in order. I'm like purposely looking for a bad trade, but you can see that typically if you follow these in order, there's not going to be very many bad trades because you're following them in that order. You can technically pick them out like one by one if you really wanted to. Like if you didn't want to look at the momentum scalp failures, momentum scalp variations, etc., you can really just focus on just one. But it's kind of hard to tell here because there's not really a strong trend at all. But let me see, because the market did start to pick up a bit. It started to get crazy after the live session. I kind of warned you guys that like the Fed was speaking, so the market was going a little crazy after the live session. But for the most part, they pretty much do go in order. So like going back to your question here, so you're asking, so meaning if the first one hits the others are more likely to follow. So yeah, going back to your question on the Pam, yes, that is correct. That's why for me personally, when I'm looking for these entries, you'll see other people take the momentum scalp failure, and then you'll see other people take the momentum scalp variation. I'm typically looking for just the momentum scalp variation most of the time. Sometimes if I see them follow like right after each other, I usually skip this first one. But if I see these two here follow right after, then yeah, typically I'm taking like these 2 entries down here. So for the most part, that's what I use as a confluence. So you can take all 3 if you really wanted to. But this one's going to be the riskiest because, you don't have a confirmation that price is still going that direction. So like for me personally, I don't take this first one here most of the time. I almost never take this entry unless like it looks really good. Like for example, if price is going down super heavily, then, most of the time I'm like, okay, I'll for sure take it. But a lot of the times I don't take this entry here because this one confirms the direction. But these 2 down here, yes, I typically do take these 2. I almost always take this one if it comes up properly, where it's followed by this one and then this one as well. But a lot of times these come here at the same time. So they didn't come today, but I think like, for example, this one over here, this was after the live session, but this one over here specifically came like super late. So let me just go and I'll use this as an example. I think we were looking, this is the one that we were waiting for towards the end of the session. It never came to that point, but this is what we were looking for when it came up. So let me just go and rewind this to that right there. So you can see that the momentum scalp failure came like way over here. And this one didn't come until like so much later, right? Because this one came at this point at 7:49, and then we got off the live session here at 8. But this is like basically what we were looking for. We were waiting for this to come up after. It kept having like a pending sell signal this morning, but it never actually closed. But you can see that they do come in order, even though they're kind of split out pretty far out. So for me personally, I wouldn't take this initial entry right here, even though it does work. I mean, it plays out perfectly fine. Depending on like which TP stop. I mean, it doesn't matter. If you're using a 2550, it would have worked out there. If you used a 1030, either way, they both would have worked out. But you can see how like this one comes way later, right? I typically like them to follow right after. So like this one, I like to avoid first because this is going to initiate the push back downwards. And then typically I want to look for this momentum scalp variation. It actually did come up right here, but there was no correction back to the upside. So here's the thing. So actually this one right here, this is the one that we were looking at the end of the session. This one actually overlaps. So this entry was a momentum scalp failure, but it was also a momentum scalp variation. Cause like, let me show you the requirements here. Like this happens every once in a while. It doesn't happen too often, but it does happen every once in a while. So if you just look at these requirements here, let me just go back and replay this. Okay, so first you want to confirm the overall trend. All morning we were looking for a sell, right? So everything here met criteria. You're looking for a sell. First step, confirm overall trend. Everything was here for a sell. We had all sell signals lined up because we were just waiting for that sell signal to come up for entry. For number 3, you want to confirm a retracement momentum signal on the 1 minute. That retracement momentum signal would have been this green signal right here, right? 4th, you want to confirm price closes past the pivots and retracement. This candle prior, this green one right here, this is a retracement candle. So this is where it becomes a little tricky because if you're looking for the same, like the order, these two entries actually come up on this, like the same strategy comes up on the same candle right here. But unless you're like really well versed in identifying and analyzing it with the requirements, you probably would have missed this. I even missed it myself because I didn't really look at it from that direction. I typically look at these in order, but if I was like not looking at momentum scalp failures at all, and I was just looking at momentum scalp variations, this here actually would have been an entry for this one. So again, the requirements, step 1, confirm the overall trend was bearish, confirm momentum aligns on the 5 and 10. We confirmed that during the live session. For step 3, you want to confirm a retracement momentum signal, which is right here, this green buy signal against the trend. Step 4, you want to confirm price close past the pivot. So these don't have to come in order, right? You just want to check these off. You want to make sure everything is coming up here. But I put them in order so it's easier to follow. Realistically, you just need to make sure that everything lines up. But I put them in this order because typically they come up in this order. But you don't have to go like, okay, if this meets, then you could look for this. But realistically, you can like mix and match them. Because if you look at the other requirements here, like for example, the momentum scalp, like you could have, you won't have an overall trend, but you can still have momentum in all the time frames. So technically you can skip over this and come back to it later. But the way that I'm teaching you guys is I want you guys to look at this in order so that you guys understand what to look for. But technically you don't have to look at them in this order. They just all have to be checked off the list. So going back to this right here, confirm retracement momentum signal, confirm price close past the pivots and retracement. This green candle here would have been the retracement. Step 5, you want to confirm price closes past the pivots in correction, right? So right here, you can see how price retraces up, and this red candle right here, even though it's in a green bullish momentum, this is still closing below the pivots, right? So if you're going by requirements here, this entry is actually a momentum scalp variation. Because all the criteria is met. We had a sell trend, momentum aligns across the time frames, retracement momentum signal, price retraced up here, closed back below the pivots, and this actually would have been an entry for a momentum scalp. This is where it gets a little tricky because the market was starting to move a little funny at the end. The reason for this is because there was heavy news coming at 8 o'clock. If you guys remembered, we almost got caught in a bad trade right here, but luckily, you know, one of our members, Madhu, reminded us that we had news at 8 o'clock. So I was like, okay, we're going to just sit out of this trade. But if you would have taken that trade there, you know, this one would have went straight to your prop target. So, you know, going back to what I was saying, they don't always come in order. Sometimes they come at the same time. But in order for you to like really pick up on how this is applied, it's better to just look at them in order, because if you look at them in order, then you have a better probability of the trades hitting. But you'll see that sometimes like this right here, they'll come out at the same time, especially if the market's moving kind of weird before like heavy news, like it did right here at 8 o'clock. All right, let me just scroll up real quick. Okay, yeah, no problem. Yeah, it's easier to follow them in order, but you can always skip around. Like, you know, sometimes when we're looking for the entries here, not for this one specifically, but for the momentum scalp. So like sometimes we're looking for an entry here for a momentum scalp, and you'll see sometimes that like everything will line up. Like for example, we'll have the overall trend, right? Everything's bearish. We'll have a momentum signal on the 10-minute, and then we don't have a momentum signal on, or for example, we'll have a momentum signal on the 5, but we won't have one on the 10, right? So you'll see sometimes on the live session, I'll go over the requirements and I'm like, okay, we have everything lined up here, except we don't have a momentum signal for the 10 yet, right? So we're like waiting for that there. And then once we have that, we can take the entry for a momentum scalp. So you're basically just checking the list off, but you don't have to do them in order. Because you'll see sometimes that, like, you know, if you have the time frames open, sometimes you'll have like a sell signal here on the 1 minute, and then like, for example, let me just go back. Let me just see how things look right here. Yeah, so looking at this right here, you can see that, you know, there's a sell signal right here. There's a buy signal right here and a buy signal right here, right? So everything has a buy signal. If you're looking for alignment of momentum, you're waiting for this here to have a buy signal as well, right? So you can see how the order kind of gets screwed up here because everything has a buy signal, but this one doesn't. So even though the requirements here are in order for the momentum scalp, you can pretty much check off all the requirements except for step 2, right? So yeah, for now, you should definitely follow them in order, but eventually in the future, once you because once you do this enough times, you don't really have to think about it, right? It's like driving a car. You don't have to remember to step on the brake. You just step on the brake because you know you're supposed to stop. It's the same with trading, right? Like for me, during the live session, I'm looking at so many things going on the chart. I'm looking at the pivots. I'm looking at the trend. I'm looking at questions. I'm looking at the YouTube. I'm looking at my charts. I'm looking at my screen, looking at my phone. I'm looking at so many things, but I don't have to think about it because I'm like, I do this every single day. So it's like second nature to me. So eventually in the future, you can do that. But yeah, for now, just follow them in order. It's going to be the easier route so that you don't miss any of the requirements, because sometimes you'll miss a requirement if you skip over a couple. So let me scroll up real quick. I'm going to go over all these questions in order, guys. So the next question here is from Jessica. Let me go over that real quick. And then next up, we have one from Allison regarding the pivots. And then scrolling down, I see your question there, Oscar. So I'm not skipping over your guys' questions. I'm just going to go in order. And then Allison has another question regarding funny movement. So we will go over these one by one. So next question is from Jessica. She's asking, Sean, I never know when to enter the trade. So the way that you should know to enter the trade is by looking at the requirements, right? That's why I keep all the requirements on the screen here. I think the best way for you to really get this down, Jessica, is to write these down on like a Post-it and then stick it on your computer or something, right? So that you know what to look for. Because I keep these up because we're looking for the requirements. If the requirements are met, that's when you know when to enter. Typically on the live session, if you're like paying attention to what I'm explaining, I'll typically say like, let me see an example here. So let me just go back to the example from earlier today. Where was that at? Or there wasn't really too many entries today. Let me go back to Monday. I think Monday was like the best day to look for entries because that market was moving very smoothly. So let me go over here real quick because we took a lot of entries on Monday. So I'll just use this as an example here. So basically, if you remember from, I'm not sure if you were on the live session on Monday, but So I'm just going to give you an example of something like exactly what I said during the live session, which you should listen for, which would be like keywords, like basically trigger words. But also it's best for you to actually have the requirements up and that you understand the requirements so that you don't have to like necessarily wait for me to confirm things. So I think someone sent me a picture here. Let me see if Jay sent me a picture. Yeah, so Jay basically, I think he sent me, I forgot. Someone sent a picture here of like their computer screen and they put like Post-its. I forgot where he posted it. He posted it in one of these groups. But yeah, basically like what a lot of people in the group do is they have a Post-it, just post it on their computer somewhere. And then it has all the requirements. So they don't have to like, oh, like this. Like, see, like he puts a Post-it there, valid. Like these are like, when you figure out what your problems are with trading, this is like what they do. Like Jay over here, he puts follow Sean, valid trades only, always do 1030, because like he knows his problem is he uses the wrong TP stop loss. He hops into like speculative trades and he doesn't follow my direction. So you obviously don't need this here, but other people put like Post-its of the criteria, like each requirement. So for example, I'm going to use this right here as an example of a trade that we took on Monday. Typically, I'll be saying things like, okay, we've already confirmed the overall trend. We've confirmed the retracement momentum signal right here. We're just waiting for volume below to confirm, right? So that's like the next step that we're just waiting for. So sometimes I'll say, okay, we're waiting for this here. I'm like, okay, if this candle closes and this volume bar is below this blue line, then we're going to enter. Typically, when the market's running, you're going to have a timer right here on the side. So we're just waiting for the timer to drop for this candle to close. As soon as it closes, I typically have everything set up here. I'm like, okay, if this closes here, we're going to enter the trade. That's why it's important that you have the criteria and the requirements already in mind so that you don't have to wait for me to like say, okay, now we're going to enter. Because, these trades happen so fast that you have to anticipate them. So you're basically waiting for the candle to close. It doesn't have the timer here because we're rewinding the time for the chart. But basically, when the timer comes down, whether you're on MT4, if you're on MT4 and you have the quick trade manager, it has a timer on there as well. It says candle close, and then below it has a timer. Let me see if I just take a screenshot of this. I don't want to copy over my, I don't want to move my MT4 over because it has my login data there. So I don't want people to copy hack into my account. But here's what so see right here, let me see if I could draw a box over it. Okay, so down here it says candle close, and then it has a timer. So what you're doing is you're waiting for the candle to close, right? If you're on the 1 minute time frame, when this goes to 0 and all the criteria is met, that's where you'd be entering your sell or your buy position. There's another timer right here on the right hand side, and basically when that timer runs down, you just want to hit buy or sell. Like for example, here criteria is for a buy. Once that timer hits, you hit buy, you're in the trade, and then it goes straight to your profit target. So like within a minute, you would have hit your profit target right there. Let me turn off the replay mode. So you can see it over here right now, Jessica. So I know it's kind of hard to see because my screen's a little smaller probably on your screen, but there's a timer right here on the right-hand side. So if all the requirements are met and you're just waiting for the candle to close, you're just waiting for this to go to 0. So say for example, all the criteria is met, and then you're just waiting for this here to close, right? So you're just waiting for this timer to come down, and there's no entry right now, but I'm just using this as an example for you guys. So say for example, you're waiting for this entry here. You have the sell button ready on your MT4. You're waiting for this to count down. It's at like 24 seconds, 20 seconds, 15 seconds. You're just waiting for it to go down to 0. As soon as the candle closes, if all the requirements are met, then at that point, you have 10 seconds there. You're like, okay, 5, 4, 3, 2, 1, etc. We're at the 5 second mark. 4, 3, 2, 1. You have your finger set on the sell button. Boom, you hit the sell and you're in the position. That's when you would enter the trade. You're just looking for all the criteria to be met. So basically you're looking for, depending on which strategy you're looking to apply. For me personally, I recommend that you guys only focus on the momentum scalp variation. And I know during the live session, it's very fast paced. So if it's too fast paced and you're not familiar with like the keywords and like what to wait for, I always recommend that you go back and rewatch, any of the previous live sessions, because I'm doing the same thing every day. Like, my main goal for this year is to only apply these 3 strategies so that it pretty much gets drilled into everybody's head, right? So that this is literally all you're looking for. I think this one right here is the safest strategy. That's why I typically only take this one, and most of the time this one too, if they come up right after each other. I don't take this one because I feel like this one's the riskiest. I know a lot of people still take it because it does hit, but for the most part, you should probably make a post-it of these requirements and then have them like maybe just posted somewhere on your screen. And then just whenever I'm analyzing things, just look at the chart and just like, okay, if the trend's confirmed, or you can even pop in the chat, like, and ask the group, like, hey, what's the trend right now, right? Because people will answer your question. I might not see your question right away because, the chat gets pretty blown up, but other people in the chat will answer, like you can ask, like, what's the trend right now? Someone will tell you, okay, it's bullish. So you're looking for buys. If it's bearish, you're looking for sells. But typically I'm like going to be analyzing it before the entry comes up. Yeah, Jessica said, so once the candle closes, I do it like pretty much when the timer gets to 0, because like, that's literally what you're waiting for, right? Like when all the requirements are met, it says, so step 4 here, or whatever step it is, it says enter on the close of the candle. So we're always waiting for the candle here to close, whether it be, this one or the other, or any candle, really, you're just waiting for the candle to close. So as soon as it closes and the timer goes to 0, as long as all of the requirements are met, you're just ready to hit that buy or sell button. You have your TP and stop loss set up already, so you don't really have to think about it. And you're just entering that trade, and then you're letting it do what it needs to do. Because typically it's going to run to your profit target or stop loss. Most of the time it's going to hit your profit target right away. So that's pretty much it. But I know it's kind of hard for you to follow along if like you're not anticipating the move, because these moves happen super quickly. Like even myself, I miss the trades a lot too, unfortunately, because I'm answering a lot of questions. But that's pretty much how you would do it. There's no specific keywords that I can really tell you to look out for. What I'd recommend is just, going back over the previous sessions. I think Monday would be a good day. Let me see the list over here. Basically, any day with a lot of entries would be a good day to like study, because you'll listen to like what my analysis is looking like and what we're waiting for. And then that'll pretty much give you an idea like, okay, this is what I have to listen for. But for the most part, I'm saying the same thing almost every day. Today was a little different because I was kind of going over other confluences. I was mentioning the pivots a lot, which I typically don't, but that's just a confluence. It's not part of the strategy. It's just something that we look for so that we know if price is going up or whether it's going down. Market's been kind of tricky. I think like February was like a tricky month for you guys to start the mentorship, because last year, February was really smooth. So I was like, okay, February is going to be a good month to really get everybody on board. But, it's been different for this year. I think it's because we're going through the recession. So the volatility is kind of going back and forth. Last year, we were kind of like coming off COVID and like everything was reopening. So everything was so smooth. But this year, it's not the same. Every year is a little different. But the thing is, I've been trading for so long, so I'm able to adjust with the market as it starts to get a little chaotic. So is there any other questions regarding that, Jessica, or are you okay for now? Because if there's anything else that you're confused with, just let me know. But I think for the most part, that's kind of like where you stand with this. I think just, understanding the requirements and then having an idea. It's kind of like, practicing law. Like, if you understand the law and the rules for that law, it's easy for you to just check that stuff off. And that's kind of how I approach trading. That's why I have everything here as rule-based. It's kind of like, practicing law here. We have everything kind of lined up. And it's really just doing everything as a checklist. Okay, gotcha, Jessica. Yeah. So like basically, if you have all the criteria met up, you're just waiting for the candle to close. As soon as it closes, that's where you'll make the entry. All right, so no problem. Let me scroll up again real quick. Next question on the list is from Allison. Looks like Allison, oh no, she signed back in, she's here. Okay, so Allison's asking, also, whenever you're free for another question, could you perform a top-down analysis using the pivots similar to what happened today? Yeah, sure. It's kind of hard to do it when it's like later in the session, but I think let me try to find because I can't remember where it was, but I know it happened this morning. So it's not like it'd be too difficult to find. So this morning over here, I think, yeah, we were looking for a sell. So a top-down analysis here that I was looking for, let me see, market was, I was looking for a wick rejection, right? Which was like Tuesday, today's Tuesday. What trade did I take today? Sorry, I can't remember what direction I traded today. I took, okay, initially took, well, we took a buy basically. So we took a buy because price was swinging up. It's hard to do it here, Allison, because the 1 hour is already closed. I think because the time when we were looking at this here during the morning, this candle here wasn't like down here yet. This like, there was a huge wick here and it was pushing up. So let me just go back and see if I can just use this as the example, because we had a bullish bias this morning. That's why we looked for a buy. Okay, so it looks a little better right here because you can see the wick. I just want to make sure there's no confusion because it just looks different when it's already closed. But during the live session, it was just easier to follow. Okay, so I think this is going to help a lot. And I think another thing that you should do too, Allison, is probably go back and rewatch the live session from today if you have time, because it's better to watch it live when it's actually happening versus going back, because we can't go back to that same exact point in time. But this is going to be like as good as it gets, right? Looking at this top-down analysis, because the candle's here already closed and you can't rewind in the middle of a candle. I think so. That's why I prefer to trade like live. Like whenever I do a live analysis for you guys could really see how the market's actually moving. When you do things like in the past tense, like right here, it's hard to really see because like it's easy to really see where price is going after it's already closed, right? Because you're like, okay, this is obvious, like price is going to go up from there. But during the live session, or when you're trading live, there's so many moving parts that it's harder to go back and really decipher what's going on. But I've been doing this for so long that it's not really too difficult for me. But yeah, basically doing the top-down analysis, I'm just going to show you what I was looking for today and how we were able to take that buy, or how I was able to take the buy when I was telling you guys for that. I was giving you the hint for the speculative move, right? Because I was like, okay, this is probably going to push up to the next zone. And that's why we took that for the buy there. I think majority of people took it with me. All right, it was like somewhere, it was in between the sessions. That's what I remembered. It was like in between the sessions here. And I was like, okay, I'm just going to ride this to the next session. It was like something like this right here. Yeah, it was exactly right here. So the way that the top-down analysis here worked was that price was below the pivots here, and we were looking for price to correct back to the upside, right? So what I did here was I looked at the 1 hour and I was like, okay, price was coming down a little bit. And this looked better live because price was actually down here. This red candle was like way down here. And then we saw it push up super heavy, right? So I saw this wick rejection here. It's basically just confirming a wick rejection off the pivot across all the time frames. It's not meant to be used as a strategy, but you can use it as a confluence check. You can basically predict that price is going to correct in one direction or if it's going to reverse. So right here, we had a wick rejection off the bottom. Same on the 30-minute, right? There's only a wick rejection on the bottom. Looking over here on the 10-minute, same exact thing, wick rejection on the bottom. So that's the confluence right there across these 3 time frames. And then we went on the lower time frames here, wick rejection off the bottom, a wick rejection off. It's just a pattern that aligns with all the time frames. So if you have all this here lined up like that, you're like, okay, rejection, rejection, rejection. And then it's also rejecting on the higher time frames, which is leading here. Odds of it pushing at least 100 pips, right? Like you're only looking for like a quick push because you're going for these quick little scalps. So you're looking for that little push there. That's where I saw the confluence. I'm like, okay, if this looks like it's going to push up at least 100 pips, right? Like enough for me to just get in and out with a quick profit. So I saw that right there and I was like hinting everybody like, okay, this is probably what I'm looking for. I'm expecting price to come back up and retest the sessions up here. So without being caught in a red flag here, obviously, I was like, I'm just going to enter this trade here and I'm going to catch that little push up. And that's basically what happened right there, right? Pushed up, blasted right through, and then it hit my profit target. So that's how I locked in this profit right here. Same exact time of entry right there, 7 o'clock. total profit of 1,000, and then same with my other accounts. So it's not necessarily a specific strategy to apply. I mean, there's other ways to implement this so that you can see things better. I think there was another strategy that aligned with this. One of the guys in the group mentioned, I think it was an SR rejection. Yeah, there was. So looking at this right here, price was actually rejecting off this SR zone. So I do have a strategy for this. Well, not for this specific thing, but it coincides with the movement that we were looking for. So we actually had an SR rejection here. One of our, if you've been part of the group for a while, you know my other strategies, and this is one of my strategies. We saw a wick rejection off the structure, wick rejection off the pivot. We had momentum pushing to the upside. This right here aligned it across the board. So if you're applying the specific strategy for this, the strategy would have been this one over here, the SR rejection scalp. Where's it at? Yeah, the SR rejection strategy. So this is available in the course, but a lot of our older members apply this. I typically apply this when the market's going sideways. This is a good strategy to apply when the market's going sideways, which is kind of what the market was doing. It was going sideways because it was up here, came down, came back above. So technically it was just going sideways. So that's why Eunice in the group, he mentioned this. He was like, hey, that was an SR rejection scalp. And I was like, oh, I didn't even know that, but everything here lined up. So it met criteria. But that's pretty much how I would identify it, and then I would take the trade there at some point. But then again, I would avoid trades once it reached the session. So that's why I only went for 100 pips here. Obviously, I could have went for a bigger move, but if I went for a bigger move here, which it still would have hit, I would have been too close to the sessions, which would have violated one of my criteria, right, for the red flags here. So I always avoid trades whenever price gets near the sessions, opening price, news price, candle prior to entry is too large, or if price is ranging. So, but this strategy here specifically is for ranging markets. So you just disregard this last criteria if you're applying the SR rejection scalp. Okay, let me scroll down real quick. So Allison's follow-up, she said, I'm just getting a little caught up in, say, a high time frame rejection, but then at that point, the lower time frame may be opposite trend. When I think of rejection, I think it gets there and then turns. On that example, a 10-minute one went beyond the pivot. Are you learning more so at the body also? Just trying to understand if my definition of wick rejection is wrong. Sorry, I was trying to comprehend the question here. It's a little no, you're fine, Allison. You're probably just, you want to think you just typed it out and you didn't really reread it. It's fine. It happens. So what I got out of your question was basically you're trying to understand your definition of wick rejection. So wick rejection is just any rejection off anything, right? So like, let me just show you an example of a wick rejection. Because it's a really simple concept, but I feel like you're not the only person that kind of like overcomplicates it. A lot of people overcomplicate it because they think that it's really complex, but realistically, it's just wick touching anything, right? So for example, here, see how these wicks are touching the pivots? This is considered a wick rejection. You don't look at the body at all. It's just the wick. If the wick is touching it, it's rejecting. The reason why we consider that, or why I consider it, is because when you have a wick rejection, it just means that price, like for example here, see how price pushes up, it comes back down, and then it rejects off the pivot. So if you get something like that, typically this is going to indicate that, you're going to get a little bounce there. There's a strategy that Sisuk applies. He literally takes every wick rejection. That's why he has like 50 trades a day. It's crazy. Like he has 50 trades a day and they all hit because he just looks for these wick rejections. But he knows what he's doing. So I don't recommend anybody do that. But you can see how many opportunities come up here, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And Sisuk's literally like hammering down on like every single sell here, like a madman, but he's hitting the trades, which is crazy. I don't recommend it because you can see down here, this is where you'll get screwed because there's so many wick rejections, but imagine taking like 10 trades here and they all lose, right? You're blowing your account at that point. So Sisuk has a different way of reading the market. That's why he can do it. But I personally wouldn't do it that well. So I could kind of have an idea of what he's doing. Like how I did the observation here where I saw the bottom wick rejection. If I saw something like this, then I would take a bunch of sells. So like, for example, here, where did we see this? At like 6 o'clock, right? So let me just fast forward to 6 o'clock over here. Or, I mean, it happened over here like way earlier. So 6 o'clock happened right here, right? So it would make sense to take the wick rejections up here. But again, you know, this is a more complex way of trading. So I don't necessarily recommend you do that. But there's ways of doing that. Like this is actually one of my very first strategies that I used to apply when I was trading. The only thing that I found difficult to like teach to other people is that you won't know when to stop, right? Because this becomes an addiction. You start to see all these wick rejections. You're like, okay, I'm gonna take a sell everywhere here. But then, you know, what happens when you get down to here and you don't know what to do? You blow your account. So I don't ever teach that strategy, but I do know what Sisu's doing and I know how to do it myself. I can make a ton of money like doing that, just waiting for those perfect opportunities for a lot of entries to line up. But it doesn't happen very often. You know, you have to literally be glued on the screen and then wait for this to start setting up. And then as soon as it sets up, you just got to be ready to take every single trade that comes through. But going back to your question, a wick rejection is just where the wick is touching anything. Like for example, here, it doesn't even have to touch a pivot. It can touch a sessions, right? So like, for example, here we have price touching. Let me just turn off the pivots let me just turn everything off, because I can show you different types of wick rejection. So like, for example, here, price is rejecting off the sessions. The only reason that we understand this is because the wick is touching that price point. So does that make sense, Allison? I just want to make sure that you get that, because the body doesn't have any relevance. It's just you're looking at the wick, the candle wick. You're just looking for it to touch anything, and then that's considered a wick rejection. So all of these here would be considered wick rejections. See how the wicks are touching the pivots or the sessions. And then, for example, if you're looking at the pivots here, that's the same thing. You're basically looking for price to just bounce off the pivots there. But you should never apply this as a standalone strategy. This is just used as a confluence. Yeah, so Allison said that makes sense. Go back to the 10-minute time frame on the previous example. That was right. Yeah, so this over here wouldn't be a good one, right? I wouldn't be looking at this as a good rejection, because you can see how huge the candle is. Another reason why I would have avoided this was because this was a news candle. At 5:30, this was an inflation news came out. So this here is an outlier. This doesn't happen very often. This was because of news that morning. But going back to like previous examples over here, you know, these again over here are, again, wick rejections off the pivots. Right there, right there, right there, and right there. So it's pretty straightforward. It's just looking for a wick to touch any price structure, whether it be a pivot, a session, a news price, opening price, anything really. But this just indicates that, you know, price is likely to bounce off those areas. It doesn't always happen. So that's why I don't recommend people take trades like that. Like, for example, here, price bounced off it, but then it still came right back down. So not necessarily a good time to make an entry. Yeah, no problem. Yeah, Allison said that makes much more sense. The outliers are the ones that threw me. Yeah. So a lot of this stuff is just used as a confluence. It's not a specific strategy that you should apply. It's just a confluence that you should be. Well, you don't even have to look at it, because the thing is, I'll mention it in the group or during the live sessions, and you'll have an idea like, okay, there's a rejection happening, so price is likely to bounce off it. But it's not something that you really need to know, because since you're still learning a lot of the basics, not really basics, but you know, the stuff with the strategies, you don't want this type of criteria to really throw you off. Because if you start looking at these wick rejections, you're going to start doing your own thing. Like, trust me, I've seen a lot of people who try to copy what Sisu does, and they just keep blowing their accounts. Like, they don't have any strategy. They just see a wick rejection. They're like, okay, I have to take a buy there. But then sometimes you'll see a wick rejection and it doesn't even go up. It just comes right back down. So yeah, definitely. Let me scroll up real quick. Okay, so that's it for Allison's question. I'm going to scroll back up. Let me see what the next question is over here. Next question is from Oscar. So Oscar left the room, but I'm just going to tell him anyways, so he can rewatch this later. So Oscar's asking, what indicator are you using for volume? I can't find that under the invite only script. So the volume indicator is the built-in indicator with TradingView. To get that, you just go to indicators here. You just type in volume, and it's going to be the built-in one. So it'll just say volume by itself, nothing next to it, not net volume, not weighted average price, just volume alone. You click on that there, and that's going to add this indicator below. I think by default, it looks a little different. Let me see if I can. Let me just take everything off. All right, so if you just add the volume indicator by itself, this is what it typically looks like. Yeah, it's not like as clean as mine. If you want to change it to that, you just go to your settings. I like my things darker because it's just easier for me to see. So I just change the opacity to like 100 so you can really see it. And then you turn on the volume moving average. And that's how you get it to look like mine. And that's pretty much it. Everything else is default settings. MA length is 20. I don't touch that, just leave it alone. And that's pretty much it. All right, let me turn these back on real quick. All right. So let me scroll back up. Let me see what's the next question. Next question is from Allison. She's asking funny movements. Can you elaborate on that? So there's no real, like, I can't really show you an example of a funny movement, really. It's just like how price starts to move. Like, let me go to where news happened. Okay, so right here, like there's no clear definition for like funny movements, just like when the market starts to move kind of weird, right? So let me just show you real quick. And the thing is, you can anticipate that. Like, for example, so we were trading over here, price was kind of moving all right, it was going sideways. Funny movement is like when price starts to spike up and down, when it starts to move very erratic, right? That's what we call funny movement. Because like you don't really know what's going on next. It just causes a lot of uncertainty in the market. I think the market was moving okay throughout the day, and it started to move a little, what we call funny, around 8 o'clock. So like right here at 8 o'clock, so the reason why we started to identify this, because price was trending down, right here. So we had price trending down, and we're like, okay, we're obviously looking for sells at this point, but you can see that price starts to push up a little heavier around 8 o'clock. So price starts to go sideways first, and then it just spikes up right here, right? Like for no reason, it just spikes up. But the reason why it spiked up like that was because we had news at 8 o'clock. The Fed started speaking at a time. Typically, the Fed has good things to say about the market because they want to push price back. They want to push like everyone to like think the market's doing well, right? They just want to push morale up because they don't want people to think, okay, we're going to a recession. People are going to freak out and they don't know what's going to go on in the world. So they usually say things to make things go up, right? Like, I don't know if you were trading before when Trump was president, but you know, Trump was like he was like the #1 person to do that. Like, it wouldn't matter how shitty the world was going. Like, the world was going to was blowing up. Like, it was during COVID at that too. Like, typically during COVID, you expect price to go straight down, but Trump was president. So what he did was he would just say crazy things like that COVID's fake, you know, like the vaccine is fake and all this stuff. And then price would just go up because everyone's like, okay, if Trump says, or the president says that that there's nothing wrong and these lockdowns are just like temporary, then the market's going to go back up. So like if you traded during COVID, the market would be dropping super heavily. But then as soon as Trump got on the mic, whatever he said, didn't matter what he say, price would just skyrocket back up. So that's what we would consider funny movement. There's not really too much funny movement now because obviously, like when Biden goes on the mic, it's different. You don't really know what he's saying a lot of the times, like not in a political way, but just in general, like we just don't even know what he's referring to, whether it's good or bad for the economy, because he'll say things and he'll just ramble on and you don't really know if it's good or bad. And then you'll see price kind of go back and forth and you're kind of like, okay, what are we supposed to do with this? So whenever Biden speaks, I typically don't trade. Before, when Trump would speak, I would actually trade because I already knew price was going to go up. But now, you know, when Biden speaks, I just don't even deal with it because there's like so much uncertainty with regard to where price is going to go. So hopefully that helps, Allison. I know there's no clear defined answer for that, but funny movement is just basically where price starts to move kind of unusually. Like this is fine. Like this is just a reversal. And, obviously consolidation and correction. But funny movements basically just, prices going down and then all of a sudden it spikes up for no reason. But there actually was a reason today. It was because the Fed was speaking. All right, so let me go back and see what question is next. Let me just put everything back on the chart. So I want to screw things up here. All right, so let me scroll back up real quick. All right, so Jessica's asking, so the red one hit the pivot and rejected. The second one was green. Is that how you know the third one will also be green and you take the trade at the close of the second candle? So sorry, let me reread your question. I know Jessica's referring to like the pivot. I think I deleted everything already. So actually it's still here. So let me just go back and reread your question, Jessica. So there's no specific pivot that we're looking for the rejection, Jessica. We're just looking for a rejection in general. So like basically the thing that I was looking at over here from that trade this morning was I was looking for any rejection. Doesn't matter what color it's on. But what I mean by the top-down analysis is that we went from the higher time frames to the lower time frames. So basically what I did here was, and this isn't something that you should even pay attention to, Jessica, because I think this is a little too complex for like where you're currently at, because this stuff is like really fast moving. So I'll explain it to you, but I think you should just ignore this completely, because I think this will like really throw you off, because you're going to start to look at this and you're going to start to like develop ideas like, okay, if I see a wick rejection, then this is where I should make the entry. The only reason I'm able to take it is because, I kind of know what to look for, but for you, it's like difficult because there's a lot of moving pieces here. But I'm going to explain to you exactly like why I thought there was an entry here. So like basically I saw a rejection off here. It doesn't matter what color it's on. I just saw price pushing away from this point, right? So when you see a rejection off a pivot like this just indicates that price should be pushing, price should be going back up, right? So I saw this here, I saw this here, I saw this here, and I go back on the lower time frames over here. Let me just clean this up a little bit. I'm going to turn off the sessions. I just want to turn off a couple things here so there's not too much going on the chart, so you can kind of have a focus on what I was looking to take here today at 6 o'clock, I believe. Yeah, 6 o'clock, which was like right here. So the candle doesn't even matter. Like I'm not even looking at the candle. So let me go over here on the higher time frames. Okay, so basically for a top-down analysis, we go from the highest time frame, the 1 hour, and then we go down to the 30-minute, and we go down to the 10-minute. So I see rejection, rejection, rejection. I go over here to the 10, 5. We have the rejection there as well, right? So we already have those rejections lined up. Now I'm looking here on the 1 minute, and when I see this rejection right here, this is where I'm like, okay, everything here is lining up and it's indicating that price needs to go back up, right? So I'm like, okay, this bounce off there, it needs to go back up. I'm like, okay, this bounce off there, this needs to go back up. So on the 1 minute here, when I see this rejection right here, I'm like, all right, for sure, this needs to actually go up at least a little bit. And that little bit is just 100 pips, right? Because I'm just going for a quick little push. Like this is all I'm looking for. So if I see this bounce right here, I'm like pretty much almost absolutely sure this is going to push up at least this much to hit my profit target. So that's kind of what I'm looking for. I'm looking at this, and you can see how there's a lot of moving pieces here. It's easy to see here because time is frozen, right? But when you're looking at this with a countdown, you have like less than a minute to just look at everything. Like, okay, this, and then you see this, and this. And then at this point, you're like, okay, I'm going to enter this trade. You got your TP set up on MT4. And then at that point, today I hint to people like, okay, hint, I'm going to enter a speculative trade right here. As soon as that closed, I entered my buy position, and that's where I took the quick move and I locked this one in right here. But this wasn't something that you should have been like anticipating, because this is more of an advanced way of trading. Whenever I give a hint like that, it's usually for the more experienced traders who can just follow me with my entry there. But this is not something that I expect anybody who's new to trading, or even like not even new, but like been around for a while, to pick this up right away. It was just a quick little inconsistency in the market. And I was like, okay, this is going to push up at least a little bit, which it did. And, obviously went straight to my profit target. So yeah. You just want to focus on that one strategy, Jessica. Just focus on the momentum scalp variation. Just get this drilled down. Just, look over the requirements. It's kind of like, taking a law school test. You're really just like looking at the requirements and then just memorizing it so that you don't have to think about it. Like for me, I don't have to think about any of the requirements because I have I create for one, I created the strategy. So I don't really have to think about it. But, for you, for example, this is still kind of new to you. So like I've been applying this strategy for, I guess almost a year now. So, looking at the same requirements every single morning at 6:30 a.m. It's, I basically forced myself to study it. So yeah, let me see if there's anything else here for me to look at. But yeah, guys, if there's any other questions, feel free to put your questions in the chat. I can answer whatever you guys need help with, trading, analyzing the charts, any of the trades that we took. This session is all dedicated to you guys. So let me scroll up real quick and see if there's anything else here. Let's see, Allison said, I've gotten very interested in actually watching the candles live. I don't know if that's good or bad, but I feel like they do sometimes foreshadow what's about to go on. Yeah, exactly, Allison. So like, these are like hints, right? When you see these wick rejections off these pivots, or just in general, if you see price breaking a structure, like if you have like a high here, this is another strategy that a lot of people like to apply. It's the high-low scalp. Like, if you just follow what I see the candles doing is typically telling us a story, right? So like, this is like telling me like, okay, price is rejecting off these pivots and it's also rejecting off these points here. My guess is that price is going to push above. And then if price ends up closing above this line here, because this is a previous high, then odds of it pushing up higher are very likely, right? That's kind of how I see it. So you see right here, price breaks above it, and then it closes. So following along with my story here, okay, if this happens there, then it's probably going to keep going up higher, right? Which it does. And then you see the rejections right here off the pivots. These are basically like additions to your strategy, to your analysis there, right? You're like, okay, if this happens here, then it's probably going to push up higher. Typically when price breaks structure like that, it comes down for the retest. And that's literally what happens. Like, it's just like a storyline playing out. So like right here, price breaks and close above it. Look how this candle comes back down. If we get that rejection off the pivot, then it's likely to continue, going in that direction. So like price comes back below it, bounces off the pivot right there. What does this tell you? Okay, it's probably going to bounce off and go up higher. And that's exactly what happens there. So yeah. No, Allison said, I just want to be a pro. Long ways to go. Yeah, no, definitely, guys. Like, this stuff isn't really that easy, right? That's why I created these indicators, because it's hard for me to really portray what's going on in my head. Like, I've been trading for over 10 years now, so I can like see this stuff. I can like, this is like reading a book to me. It's the same as like learning a language, right? If you know how to speak another language, it's because you guys practiced it enough where it becomes second nature. Trading for me is second nature. I can do everything without any of these indicators, but it's hard for me to explain to you like, okay, how did I know that price was going to go up? I can't really explain it to you, but now that I have the indicators that I created, I'm like, okay, I know it's going up because I created these indicators to show you, like the trend meter down below shows you where the strength is at with regard to the trend. We also use the pivots here. So it helps you create that storyline. There's a lot of people who don't like indicators, but I feel like a lot of people don't like indicators because they don't know how to use them. That's why I had to create my own indicators, because it helps me just portray what's going on in my head. Because there's like a million things going on in my head, but in order for me to show you what I'm thinking, I have to show you on screen, because I can't just tell you, okay, price is going up, but I have no logic behind that unless I have my indicators here to show you the reason why price is going up is because I see the rejection points off these. Yeah, Jessica said, I remember you trading in class. Yeah, I know. It's good. I've been trading since college, because I always had a fascination with trading. And then during after law school and like working in law, it was like, man, it wasn't that I hated the job. It was just that I hated working a lot. So, most of you guys who know me from before, like, I went to law school, worked at a big firm, and it was just like it was really draining because I was working like, 40 to 80 hours a week, and it was like so demanding, and it was like, I didn't have time, and I felt like my health was like deteriorating. And I was like, I was getting paid a good amount, but like not enough to like basically, uh, basically, do it and then, you know, have to pay off my loans and have to like pay off this other stuff and still live life and be happy and all this stuff and find the balance. So that's why I like really got into trading. And then, I mean, I still enjoy law. Maybe eventually at some point I'll go back to law once I'm able to like automate this stuff. But yeah, I think this is it was a good exit for me because now I don't have anything to worry about. I'll work till 8 o'clock every day and I'm pretty much free. Yeah, exactly. Allison said, that's why I want to do this because vet med every day won't pay for traveling and it'll wear you down. Yeah, exactly, Allison. And I think this is perfect for you. You know, you can work as a vet, but you can work at your own hours. Like you can work part-time as a vet and you can travel and you can trade in the morning with me and you can have fun and enjoy life. I think that's really what it is because, you know, you don't get those years back. So it's always good to have something, not necessarily to fall back on, but some cushion there. All right, let me scroll up real quick. We have one question from Andy. Andy's asking, hi, Sean, in regards to red flags, how are you obtaining the news price? Yeah, Andy. So for me to obtain news price, what I do is I use two different platforms or two different websites. The main website I use is Forex Factory. So if you go to forexfactory.com, this is what the website looks like. If you click on calendar right here, make sure to set your time zone here. I have mine as Pacific time. I'm located in California. So I have it set to Pacific time. I go to calendar here, and then it has the times right here, right? So for example, this morning we had CPI news. You can understand how important the news is, but I don't think it even matters because even if it's low impact, I still mark it up on my chart. But I only mark up US news. So for example, right here at 5:30, we had news, right? So what happened was when market opened over here at 5:30, let's go to, today was what, Tuesday. So pre-market, I'm usually on the charts by like 6 o'clock. So I'm just gonna go and like act like I just woke up this morning and it's like 6 o'clock. Okay, so 6 o'clock right here. I look at the calendar and I'm like, okay, 5:30, there was news, right? So what I do is I look over here at the calendar. I go to my candle and I look at the 5:30 candle. Right here at 5:30 is when the news came out. So if you have a red candle right here, this means that the price starts at the top. If you have a green candle, that means that the price starts at the bottom. So at 5:30 right here, you can see price came down. So this candle started from the top, right? So I use the horizontal line tool. I use the magnet tool and I go right to that 5:30 time slot, click on that right there. I usually use a pink line and that's how I get news price. So this is how I get news price. I look at news right here and I look at how price reacted to news. So at 5:30 a.m., that's when the news candle happened. Price came down at 5:30. So this is where it started and that's how I get news price. Another outlet that I use is MyFXBook. So you go to myfxbook.com, you go to news, sorry, not news, economic calendar. And then you have, it's usually the same thing. They have the same things here, but sometimes they have more news. So that's why I use two of them. So these were the same. There was another one here at 5:30, but you can see that there's one here at 8 o'clock, which wasn't, actually it was here. It's the same news, but sometimes you'll get additional news events here on MyFXBook. So these are the two places I look, forexfactory.com/calendar, or just go to forexfactory.com, click on calendar, and then you go to myfxbook.com and then click on economic calendar, or you can just go to myfxbook.com/forex-economic-calendar, whichever is easier. But if you go on the course, I also have links on there as well. Yeah, no, you're fine, Jessica. I know I see you keep hopping back in, but it's all good. It's no problem. But yeah, Andy, if actually Andy's not even in here anymore, I guess you can go back and relook at that later. But let me scroll down real quick. Allison said, sorry, I know I'm monopolizing this convo. Sorry, friends, last question. But do you have any tips on anticipating reversals? So I would personally not anticipate reversals, right? Because the thing is, if you anticipate reversals, you can be wrong, right? It's just in the whole point of anticipating it. Oh, Andy's still here. Cool. Yeah, no problem, Andy. I thought you left. But yeah, if you have any other questions regarding the news price, just let me know and I can dive deeper into that. But anyways, the next question here from Allison, she's asking about anticipating reversals. I personally don't recommend anticipating reversals because a lot of the times you're going to be wrong. Most like, unfortunately, you're going to be wrong. Probably, 7 out of 10 times. So for me personally, I don't anticipate it. I just wait for the confirmation. So like, for example, today, let me see if I could. So we were looking for a sell today, right? This morning, and then price ended up reversing right here. Like, yeah, of course you could have anticipated the reversal here, but instead of anticipating, I just wait for the confirmation. So like, there's ways to anticipate it, and I'll show you. Let me just go over here. I have strategies for that. So I know you came and joined a little recently, Allison, but if you look at the strategies over here, and the thing is, although they're available, I don't recommend that you really put too much time into this because I've seen a lot of people that they start to focus on the reversals and they just end up like going into a horrible like downturn of like revenge trades and over trading because they keep trying to catch the reversal, but most of the time they're wrong. So there's a strategy that I used to typically apply, the variation strategy, the original variation strategy. So if you go back in the course, there's a couple strategies here. They're all reversal patterns. So the V1 variation, V2 variation, there was a time period where we used to trade these a lot, but I stopped trading them because a lot of people kept screwing it up. Like, unfortunately, they were good strategies, but the thing is a lot of people started getting greedy because they wanted to take every single reversal. So these strategies still work very well, but it's like, it's only good to some extent if you're not greedy because these entries come up very often. So for example, here, let me see if I can find one. Okay, so here goes an example right here. This is a V2 variation. So first you want to confirm overall bias. I think earlier this morning price was bullish, but then it switched down to bearish. But we're just going to assume here that price was actually bullish, right? So first you want to confirm overall bias. We're just going to assume that it's bullish, even though right here it looks bearish. We're just going to assume that. You want to confirm the high low. So we have a low right here. You want to confirm the high is green or the low is red. Actually, it's not a V2, it's a V1. Sorry, take that back. V1. So first confirm overall bias. We're assuming that it's bullish. You want to confirm the high low right there. And then you want to confirm that the candle following the high low is a double wick or double body. So right here, you can see this low is a wick. And then this wick right here is right next to it. It's on the same exact level. So you can see right there that it's at the same exact level, right? So for third requirement, you confirm that it's a double wick, which is right there. Fourth, you want to confirm pending momentum in the direction of the trade. So this here doesn't meet criteria, but I'm just using this as an example. Basically, all these strategies here identify reversals. So if you were to see something like this, you can anticipate that this is a reversal or it's going to just bounce off this point here. So you have that lined up right there. And if we move forward, you can see where price goes and it pushes right back up in reversal. It's not a full-on reversal, but you can see how it plays out, right? And then if you look for these here, like basically you're just looking for these double body and double wicks. It's like basic price action, but I've turned it into an actual strategy. I think this is a better example right here, actually. Let me go back over here. So looking at this right here, this is a better example because you can tell that price was just retracing, right? So right here, price was below, it came back above, and I'm expecting this to reverse because price here retraced up, and I'm looking for the reversal back down because it's going to be a correction back in the direction of the trade because price was technically bearish here, but it pushed up. And this is actually a really good example because everything actually meets here. So we have a high here. It's a double body rejection on the same exact level. So we have first confirm overall bias. You can see that it was bearish prior to getting to this point. And the only reason I know this is bearish is because this morning we were looking for sells. If you guys remembered from this morning, pretty much all morning we were just looking for sells, right? That's why I know this here had a bearish bias. You have that lined up right there. This is going to be an indication of a reversal happening right back down. So we have the high here. It's a double body rejection. The bodies are on the same level. you have a pending momentum. Pending momentum means that there's a sell signal coming on the way, a pending sell signal. We have a buy signal here, so the next signal has to be a sell signal. You have this lined up, and typically you would take the trade here for a sell if you're applying the V1 variation. And you're expecting price to come right back down. So target price point would be down here because you want price to correct back down to where it was originally. So you can see where price was down here. This is your target price point because you're expecting price to correct back down and then continue down further from that point, right? So this is a reversal pattern right there. You can see price plays out and it goes straight back down to that level right there. So it pretty much just goes back to where it was prior to this retracement. Let's see. Allison said, trying to avoid them because I keep getting stuck on my deck. Yeah, no, definitely. Allison said, okay, understood. I believe I have to start looking more at the SR levels. So the SR levels, I wouldn't really look at those either. So like I was mentioning that before in the chat, guys, like a lot of these tools that I've created, they're used as a confluence, but you don't really need all of them, right? Like if the momentum's there, it's going to blast right through it. So that's why I always tell you guys that less is better. That's why like during these live sessions, we only focus on 3 strategies. I have over 20 strategies here that you can apply, but if you try to learn all of them, you're going to start to be super confused because you're going to start mixing up strategies and mixing up confluences. That's why, like for me on the live session, I always do the same exact 3 things every day. Like literally all you need is these 3 strategies. But of course, when you guys get on the course and you see that there's like 20 strategies there, you want to learn all of them because you're like, okay, the more strategies I know, the more money I can make. But realistically, the more that you know, the more money you can lose. That's the key thing that a lot of people don't understand. It's really less is better, because if you're doing less and you're just patient and you're disciplined enough to just take, 1 or 2 trades a day, because these trades come up almost every day. Like almost every day, you'll find at least one of these trades. If you can just be patient and wait for one of these to come up, that's all you really need, right? Because if you're using proper risk, you're making about 1% per trade, if not like a little less than that. And then it adds up at the end of the week, the end of the month, the end of the year, without you even knowing it. Of course, you can take more trades and you can make more money, but you can also lose a lot more money. So for me personally, and especially in your case, Allison, because you don't want to do this full time, so there's no point in you learning all the strategies. You should just focus on one and master that one strategy so that you can like lock in your trade and then go on with your life, right? That's what I do. That's why I trade from 6:30 to 8. I focus on just these 3 strategies here, maybe a couple of speculative moves because obviously I know what I'm doing. But for the most part, these are the main strategies I follow. I trade until 8 and then I'm done. I go on and do whatever I want to do after that. So I think that's the same path that you should go down, Allison, because you don't want to do this. And I don't recommend you do this full time because this is going to be more stressful than working your normal job. Because the thing is, once you start trading a lot and it becomes an addiction, that's where you start to go down like a downward spiral. And I've been through that. I've been to a point where I started making a lot of money. Like I would make like, 10, 20K a day, like easily. And then I just get addicted. I'll be on the chart like for 24 hours. And that was bad for my health because, you get no sleep, you're just tired. And then that one day when you don't have enough sleep, you start to like make a lot of mistakes. So, yeah, I would recommend just sticking to that. I would recommend to just stick to what I'm doing on the live session. If I don't mention like support and resistance levels or order blocks, there's like you'll see a lot of people talk about a lot these other things, support resistance, order blocks, etc. That will just like really mess with your trade psych, right? Because you really want your mentality to be that you're looking for one specific thing and you're not thinking about like a million things at once. So that you can be focused and you can make sure that all these criteria is being met. Because if you're looking at this and then you're looking at support resistance, I'll show you an example of where that will kind of mess with your trade psyche. So like, for example, here, let me see where that trade was. I'm going to look for a trade here and I'm going to show you where you might not take it. So for example, right here, there's a sell entry right here. But if you turn on the SR indicator, the SRV2. Okay. So check this out. See how you turn on the SR indicator right here? If you're looking for a sell entry here and you see that there's a support right here, what are you going to do at this point, right? So like you mentioned, you said you need to focus on SR levels. If you're focusing on SR levels right here, Are you going to take this trade for a sell? Probably not, right? I'm thinking. So you see a sell entry right there, but you're like, oh, there's a support there, so I should probably not take that trade. What happens at this point? You have a perfectly good trade, but you decide not to take it because there is a support there, right? What happens? You miss the entire move and you're mad at yourself because you're like, damn, I should have never looked at that support. That's why I'm telling you shouldn't look at the support, because this will throw you off. Yeah, sure. Let me unmute you real quick. All right.
So if you can go back, I see what you're saying. If you can go back to the very first red momentum signal that you have on this chart right here, like all
this one right here.
Yeah, if you can replay that like this location is where I'm getting stuck. Like I see very bullish, and then all of a sudden it dips down. I'm like, okay, like thinking about this, on fresh time or real time, I'm like, okay, it's just dipping down for a retracement and then it's going to go back up. But I don't know how to take this and be able to say, okay, it's likely going to reverse now. Does that make sense? Like,
yeah. So
is there a way that I can look at this and be like, oh, it's going to continue or it may reverse?
So the reason why I would identify this, so let me just go back. So this is at 719, right? Let me go back to these other time frames here. Because, like looking back at this back in time, it's harder to tell because we're not looking at it real time. But I think during the live session, we were definitely looking for sells at this time. So let me 719 over here. I'm just going to go back to the same exact time so that we can kind of look at the same thing here as if it was happening real time. 719. Because I think the main thing that we were looking at the time was the 1 hour. The 1 hour is like the main thing that was telling us like, okay, this is probably going to, or not the 1 hour, but the other time frames. Okay, this right here as well. Let me zoom out of here real quick. Okay, so you saw this right here. 719. Six. Okay, so this was what would have triggered me to not look for a continuation back up. Let me see if I could get this one here too. Okay, so I'm gonna try to get as close to that time as possible. See if I could zoom in a little bit here. 719. Okay, so the main thing here that we were looking at, and I just kind of recall from today's live session. So this is where you were kind of thinking, okay, is price going to continue back up or is it going to come back down? The thing that I don't have here are like the other markups that I had during the session. Because I know during the live session, we were waiting for a confirmation for price to continue up. But we never had that confirmation. I think price started to come down right here, and looking at the higher timeframes, I think this is what was basically telling us that, this is probably going to come right back down because the 1 hour here was like so far below. And, obviously if you have something like this is going to make you second guess whether price is going to shoot back up higher. The other main thing too that we were looking at was, man, I can't remember what we were looking at, but I do remember that we were definitely looking for only sells this morning. But I know you're looking for something to really like show you how could you predict that this wouldn't come back down for reversal, right? Because you're looking for a buy, is that correct? I think you might muted yourself, Allison. It's okay. So I think what you were looking for was for price to go up here. And your question mainly is like, okay, how do I know whether this is going to go up or this is going to go down? I can't remember exactly what I was looking for here, but I do remember that we were definitely looking for sells. I think the main thing here that was indicating that we should probably hold off was going to be the 1 hour here, right? Let me see if I move this forward. What happened on the next candle? Yeah, because this thing just kept coming down lower and lower. So what I was mainly looking for here was this. So, how I mentioned earlier with the top-down analysis, this is why I wouldn't have predicted this to continue up. What time was our entry from today? The entry happened around that same time, actually. What did I take? Actually, we took the buy there, but we weren't looking for buys for things to switch here. Let me see if I can find. Does that kind of answer your question, Allison? I just want to make sure, because like there's going to be different hints here and things that you're looking for that's going to identify whether price is going to correct back up. So for example, if we didn't have this big red candle right here, say if we had, yeah, exactly. It's best to view it live because you can't see how the candles are moving at the time. But if you go and rewatch the live session from today, let me see if I can even pull it up. Because I know for sure we were looking for a buy there. Let me see if I can pull it up here. Yeah, because the thing with the 1 hour candle here is that you don't have the entire candle. The candle's already closed below. But I know at the time price was still above, but then it came back down for correction. Here, let me see if I could pull up the live session from today. All right, let's see if we can get it up right here. I'm getting a little closer. 7 o'clock. Here, let me just read your question real quick. So Allison mentioned it's just honestly been a repetitive pattern for me. I see an entry for, or I think based on the second strategy we used, and boom, opposite way. So let me go back to that over here. So the thing with this, I think that's exactly what we were looking at. So that's why we never looked for the buy here, because that strategy never played out, right? So looking over here, yeah, price actually never. No, wait, it did close right there. I forgot what was here. There was something here that prevented us from entering the trade though, because we, or no, we did take the trade there. Did we? I can't remember, honestly. Let me see if I can pull it up on the. So I had everything lined up here. I'm just gonna try to see if I could get to like that 7 o'clock period. This was at the 10-minute. Here, let me see if I can just maximize this. They mentioned that a lot of the stuff starting to click for them. The more and more that you guys listen to my analysis, test the pivot, have any actual plans, start looking for entries there, looking on the hard. Here, frames, want to just hop into these trades, but just, be. So timestamp was right. I think this is exactly where we were. Wait for that confirmation. Up at 34. It was the inflation news. You guys can see the big spike to the downside right here. That's 709, right? So looking at this right here, this is how you would have identified not to take a trade, because it was like literally at the sessions, I think, at that time. Let me check this stamp. 719. Okay, let me go forward a little further. I forgot what I analyzed, but we covered this during the live session today. And this is why it's better to look at it live than fake out, push to the upside, fake out from the, where does it need to be, right? This is the middle ground right here. Right, this is where eventually you got rejection off of it right here on the 10. So I'm waiting for looking at on these from the trend. But you guys can see that the analysis here is starting to 10-minute to confirm. Right there. You would take a buy right here if this closes with a rejection off the pivot. I'm giving you guys a hint there. So that's where we took the buy. When I said, okay, I'm giving you guys a hint. On for me, the buy there. I told you guys this was going to play out like an hour ago. Yeah. I don't want to instill here on the okay, I'm looking for the sell signal because that's really where, anyway, all together 5 on Okay, this is exactly what you were talking about. Oh, it was at news price. Okay, so that's why we wouldn't have taken the trade there. I don't think price ever got past news price right there. So this is the entry that you were looking at, Allison. And I mean, it's literally just a red flag. That's the main thing. So price never got past that red flag right there. And that's exactly why there was no confirmation, because we were waiting for the confirmation. And Nick's asking when it could close technically an official entry. Because I even told Nick not to take this trade, and he took it and he lost the trade. Remember, because the momentum came right after. Following my red flags over here, it's not one that so I mentioned, yeah, I'm not taking the trade here because of the red flag. And then after this, we never got a buy signal that came up after it. Nick still took the trade, even though I told him not to. And unfortunately, he lost the trade. Yeah, because the buy signal came up right there. And yeah, if you go back and rewatch the live session, I think this pretty much explains it. Because I would avoid the trades at this point. So if you guys want to take it, and if you want to take it, it's up to you. You can take it. And you can see how it's. Yeah, so this was a confirmation. I think what was happening here was if this here actually pushed through, then we would have been like, okay, this is going to swing to the upside, but it never actually played out. And then from this point here, it ended up coming down. So that's how you can make the confirmation. That's like basically what I was explaining earlier, that you should never really anticipate where price is going. You have to wait for the actual confirmation. The confirmation never came. So that's why we never get caught in these fake outs, because we actually wait for the confirmation. Yeah, because price came straight down, and this is where we started looking for sells. Yeah, exactly. Yeah, no problem, Allison. Yeah, but in the future, yeah, it's better to just do this stuff live, because Allison said confirmation. Yeah, because so the confirmation is if price continues up here. Price never continued up, right? So what we were looking for. So during this time when this played out during the live session, there was news price right here. There was it was literally on this candle right here. So it was at the candle right there. What we were waiting for at this point is, because we couldn't take the trader because it was right at the red flag. What we were waiting for is for this to start over, right? Because we were looking for another leg to push up. So the confirmation would be another momentum scalp failure, but that momentum scalp failure never came down. Price came straight down from this point. So that's the confirmation that never came. If that confirmation came, say, for example, this didn't happen and price actually, so it came up, came down, came up, came down, and continued, that'd be the confirmation, right? Because if this here was what happened, then odds of it continuing up higher is pretty much what would happen. So that's a confirmation that we're looking for. That's why I only focus on these strategies, because these strategies will basically tell you what's going to happen next. So for example, price came down right here. So this was a confirmation for price to come down, right? But again, right here, price never confirmed. So we had the same dilemma here where price was coming down. But the problem with this is that this candle here it didn't meet criteria, remember this one? So I was like, okay, criteria is not going to be met here, but if we have another one that follows up after, that's basically what we're looking for. We have the first leg here, and we're looking for that next leg to really confirm that it's going to keep pushing that direction. Same thing happened down here. Price came below. We had the setup, but it didn't meet criteria. So if we had another setup that happened, right here, and price kept coming down, that would be the confirmation. Because initially, when price first moves across the pivots, that's a hint that, okay, you can anticipate that price is going to push up, but you probably shouldn't enter trades yet until you have some sort of confirmation. That's why you typically don't take the first leg. I'll take the second leg if it ends up confirming again a second time. Because if you look back to Monday was actually a way better example. So if you go back to Monday over here, oops, let me just turn off the sessions. I just want to clean it up a little bit. So if you go back to Monday, this is where you actually have a pretty clear example of what I mean by that confirmation. So going back over here to 8 o'clock or whatever time. So we had one entry that happened right here, right on open at 6:30. So this is the first leg up. So right here, price is shifting to the upside. The next leg came up over here, middle of the session, right? This is the confirmation that you were looking for. Because if you have this, then it just keeps going higher and higher and higher. And that's really what you're looking for, because once you have this here, you can just keep taking more buys because you'll see one entry comes up here, it confirms it. So, okay, great. That entry comes out. You have another one right here. And then it just keeps going and going and going. And then you have another one right here as well. See how price keeps going up? So you got one leg there, confirmation, 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 confirmation right here. So you basically had like about like, I mean, we stopped trading at 8, but if you kept trading, you'd have like 12 entries right here because they just keep happening right after each other over and over and over again. Yeah, no problem, Allison. Let me see if there's any other questions here. So let's see. All right. So I think that's it with your questions there, Allison. Let me know if I missed anything because I did see that you put another part here, but I think we already covered that in addition to like what we covered. So let's see, Pam over here is asking, on the scalp strategies for the retracement signal, it also has to have a momentum signal, right? Yes, that is correct, Dr. Pam. So like for the scalp strategies, the going back to Pam's question, for the scalp strategies, yeah, the retracement signal is the momentum signal. So the requirement for that here, let me just put the momentum scalp failure right here and the momentum scalp variation. So the retracement momentum signal is a signal. So it has to have like the vertical bar on it. So that requirement requires that, like for example, we have a bullish bias here. The signal against the trend would be the retracement momentum signal. So that'd be it right there, that red one. Also this one right here. And also this one right here. Scroll down a little further. And continuation to that question, and the momentum signal would be opposite, meaning if I had buy signals on the other time frames, then red for retracement. The opposite signals would be against the trend, not necessarily the momentum, but the trend. So for example, right here, you can see how price is above the pivots, the trend meter is green, pivots are angling up. If this is bullish, like it's the same across the 1 minute, 5 minute, and 10 minute, then the proper direction of momentum would be a green buy signal, right? Because you're matching them green and green. That's correct. If you have this right here where it's red, but everything else is indicating price is going up, then this would be the retracement. So looking for the retracement momentum signal, you're just looking for a signal that's against the trend, not momentum. Like you can have a buy signal on like the 5 and 10, but that's irrelevant. The thing that matters here is that you're seeing the signal go against the trend because the trend's stronger. So like, let me put the, so strength of movement. Trend is stronger in the longer term. Momentum is stronger in the short term. Yeah. So basically, this is like how it would move. So like, for example, if you have trend pushing up on all the time frames, odds of it going higher are very likely. Momentum is short. That's why like all of our entries are based off momentum. Because if we have trend going up and then we have momentum going up, then you just tie 2 and 2 together. You got a green momentum here. You got a green trend, price above the pivots. These are like almost for sure going to hit. So you want to look at the trend so that you know what direction price is going to go, like maybe, an hour to 2 hours from now, because that's how long you'll be trading for. But the momentum is where you're actually taking entries. So like, that's why you'll take the buys here as long as it's in the direction of the trend. Yeah, Pam said, okay, so signal against trend, not necessarily against momentum. Yeah, exactly. The only thing that you need to confirm is for the momentum scalp variation. It's not necessarily that you're looking for an opposite. You're looking to make sure that they're going the same direction. So like looking at step 2 over here, you just want to make sure that momentum is going the same direction because you're just kind of catching the wave, right? So like, for example, here, you can kind of see how the wave pushes up. Like like this one right here. So see how price pushes up and it comes back down and then it pushes back up. You're just catching this wave here. You're waiting for it to lose power and then push back up further. So like looking at this right here, I'm sure this was a sell signal, but I'm pretty positive that on the other time frames, everything else was still green. So, and the reason I know that is because if I turn on the gold bars here, you can see that we got a gold bar right here, right? So this shows you that momentum was green on both the 10-minute and the 5-minute because you have a gold bar there, because that's where I have my settings set to. So, but a lot of this stuff lines up. So if you already have like the trend very strong, maybe trend's already going up, odds of this being green on the other time frames are like pretty much assumed. Because if price, price follows the trend. So trend's going to be like the stronger movement, and then the momentum is going to follow it. All right, so I think that's it. Let me see. Yeah, Author Pam said, got it, makes sense. Always appreciate you. It's getting clearer and clearer each day. Yeah, no, it's just going to take a matter of time. If you just keep practicing every day and you look at the charts, all this stuff's going to like make sense to you, because it's like I mentioned before, it's like learning a language. You just have to keep practicing and never really stop. A lot of people mention that they want to stop trading for a while, but I never recommend you guys stop. Even if you guys stop like trading like a real account or anything like that, I would recommend to always look at the charts, because once you stop practicing, you're going to forget about it and you're going to have to start over again, because it's all going to be new to you. So what I recommend is just keep trading every day, even if you're still practicing. Just even hop on a fake money account and play around with it, because the more that you practice, the more and more it'll make sense to you guys. So all right, guys, I think that's it for the questions. We've been on this session for about an hour and a half, about 2 hours now, actually. So if there's any other questions that you guys have, feel free to email me, Sean@KodiKaiTrades.com, or message me on Telegram. Telegram is always going to be the fastest way to get in touch with me, because my email, I only check like maybe a couple times a day. So if you guys have any questions, feel free to reach out. Otherwise, we'll be back here tomorrow morning for the next live session. Hopefully this week continues moving smoothly, because it's been kind of choppy the past couple of weeks. So we'll see. Let me check if there's any news tomorrow, actually. Yep, we got some high impact news again tomorrow morning. So we'll see how that affects the market. So, all right, guys, have a great night.